Inflation throttled back significantly for a second month in November as prices for goods that surged during the pandemic continued to dip. Still, inflation remained elevated as the cost of many services kept marching higher. Consumer prices increased 7.1% from a year earlier, down from a 7.7% rise in October and a 40-year high of 9.1% in June, as soaring food and rent costs again offset declining gas prices, according to the Labor Department's Consumer Price Index. The increase in inflation last month was at the slowest pace since December of last year. And it came in under expectations of 7.3%, which was predicted by economists surveyed by Bloomberg. On a monthly basis, consumer prices increased just 0.1% following a 0.4% rise the prior month. Core prices, which exclude volatile food and energy items and better reflect underlying trends, increased 0.2% from October following a 0.3% bump the previous month. That lowered the annual increase from 6.3% to 6%. The better-than-expected news on inflation sent stocks soaring in early trading as investors anticipated the report will prompt the Federal Reserve to dial back its aggressive interest rate hikes aimed at corralling price increases. The Dow Jones Industrial Average jumped about 650 points, or nearly 2%, just after trading began at 9:30 a.m. The Fed is expected to raise its key interest rate by a half percentage point on Wednesday after 4 straight three-quarters-point hikes. Morgan Stanley predicts another quarter-point increase early next year before the central bank pauses. The worst inflation is very likely behind us, but high inflation is not over yet, said Jason Schenker, president of Prestige Economics. Broadly, prices for goods such as used cars and furniture have been falling or stabilizing as COVID-triggered supply chain snarls have eased.